buying back or the repurchase of shares by a company, it's important for you to note that this is the new section of work that was added by the CAPS syllabus. So if you work through past papers, this might be something that you will not find in many of the past papers. So a company may decide to buy back or repurchase shares already issued. The reason can be to retain control of the company by reducing the number of issued shares, or to adjust the debt-equity ratio, or simply to reduce the number of issued shares in resulting in a bigger return in the form of dividends for the remaining shareholders. Now, the repurchase of shares can be done at a higher price, or it can be done at a lower price, lower than average or higher than average. It is, however, only expected from candidates to record the repurchase of shares at a higher price than the average issue price. So yet again, as previously mentioned in the previous video, it is very important that you must be able to calculate the average share price. How do we calculate the average share price again? By working out the ordinary share capital balance divided by the number of issued shares. So in other words, when I repurchase the shares at a higher value than average, the accounts will be as follows. Now, when we consider this, it is important for you to note where the accounts or where the information went when it was first issued. Now, you would remember from the previous video, when we first issued the shares, we recorded that issued amount in the bank, increasing our bank, and also increasing our capital. So in other words, the amount that ended up in capital the whole time, divided by the number of shares, that is the average price. So in other words, when we now buy back, we will be able to get average price from the original entry of issuing the shares. So in other words, the average price needs to be taken out of the ordinary share capital account. So the ordinary share capital account will then be decreased whenever it's bought back, but only, and this is so very important, only the average price can be taken from here, because it was only the average price that was put in the first place. Therefore, I can only take out the average price if I buy back. Where does the rest then come from? The rest then needs to be taken from our own personal profits. In other words, the profits of the company. Now, where do the company keep their profits, their extra profits? They keep their extra profits in an account which we call retained income. Therefore, if the average is taken out of ordinary share capital, the above average, in other words, the price higher than average, must then be taken from the retained profits. In other words, the above average will be taken from here. Taken from retained, taken from share capital, and then all of them, the credit is then taken out of bank. So that's exactly what is said here. We will credit bank with the total amount paid for the repurchase. We will then debit two accounts. The first account to be debited is the ordinary share capital. The second account to be debited is the retained income. Ordinary share capital will be debited with the average price, whereas the retained income will be debited with the difference between amount paid and the average price. In other words, will be debited with the above average price. So the above average price must come from our personal profits, the company's personal profits, which is still lying in retained income. Let's go and do an example quickly. Example number 2. The repurchase of shares at a higher price than the average issued price. Information. The following balances were taken from Park Traders Limited on the 1st of March 2015. Ordinary share capital, which represents 250,000 issued shares, is 925,000, and the retained income at the moment is 754,000 transactions. On May 30th, 2015, a further 50,000 shares were issued. 50,000 shares issued at a price of R6.70. September 30th, 30,000 ordinary shares were bought back at a price of R7.10 per share. Required. Firstly, calculate the average share price on the 1st of March. So this is the beginning of the year. So the beginning of the year, we had 925,000 in capital. So 925,000 in capital, which represented 250,000 shares, leaves us with an average price of R370 per share. Now the calculation of the average price on the 30th of May. So what changed? What changed from there is that beginning of the year we had 250,000, but here they say that we issued a further 50,000 on the 30th of May. So in other words, we had 250 issued, but now we have 300,000 issued, which changes the value here. Beginning of the year, we had a capital value of 925. What is our new capital value? Our new capital value, we first need to work out 50,000 times R6.70. That leaves us with a new capital value of 1.26 million. 1.26 million because it was the 925,000 plus the 335,000, which leaves us now at a capital value of 1.26 million. So 1.26 million, how many shares does that represent? Because remember, to get average, we need to now divide it by number of shares. Number of shares, we had 250. We issued a further 50,000. So how many number of shares? 300,000. So what is the average price? Average price per share went up to R4.20. Third question. Complete the given transactions in the ledger accounts. So ledger accounts. Ordinary share capital account. Let's start there. Beginning of the year, we started the year with a balance of 925. Then, as you can see here, on May 30th, we issued 50,000. 50,000, how does that go into your account? It goes in as bank CRJ 335,000. That leaves us with 1.26 million. But that's not the end of the story. Remember, we still had a buyback. So let's see how to record the buyback. The buyback says 30,000 ordinary shares were bought back at R7.10. Now this R7.10, is that higher or lower than the average price? If we go to the average price that we've worked out just before September 30th was R4.20. So in other words, R7.10 is higher than the average price. How much higher? Let's go and work it out. If we go and calculate it, the average price, R7.10 minus the average of R4.20 leaves you with 290. So in other words, remember what we said? The 4.20, the average, needs to come from the account that has the average price. In other words, the ordinary share capital account. The rest, in other words, the above average, the 2.90, that needs to come from our profits. And our profits are kept in retained income. So let's see. The average is then taken from the account that has the average value. So in other words, bank will take the amount of 30,000 shares at 4.20. In other words, the 126,000 it will take from ordinary share capital. The rest, in other words, the 2.90, the 30,000 times 2.90, bank will still take that money, but it will now take it from retained income. So in other words, all of the 7.20, 7.10 in the end leaves my bank account. Some of it coming from ordinary share capital, the 4.20, and the rest, the 2.90, coming from retained income. And therefore, if we take some from retained, some from our profits, some from the average price from the ordinary share capital, in the end we're able to get everything that is needed to be paid from our bank account. And then we simply need to balance the account. So what is left in our ordinary share capital is the amount that we issued, the 1.26 million, minus the 126,000, which leaves us with a balance of 1.134 million. And our retained income, we had 754,000. Of that, we gave 87,000 back in order to buy back some of our shares. So that leaves us with an amount still of 667,000, which is now what is left of our retained income. And that is how we calculate or how we record our buyback of issued shares. Let's quickly recap. The average price comes from our ordinary share account. The above average price comes from our retained income account.